Have you ever wondered how some people seem to make a fortune from investments that appear risky to others? Welcome to the exhilarating world of speculative investments, where every decision can lead to striking gold or hitting rock bottom. This isn't your grandma's stock portfolio. We're talking high-stakes, potentially high-reward investments that can turn a small sum into a king's ransom, or on the flip side, a king's ransom into a small sum. Let's dive in and understand what speculative investment is all about. Unlike traditional investments where one invests money with the expectation of generating a steady income or profit over time, speculative investments are like playing a high-stakes poker game. The aim is to buy low and sell high, often within a short time frame. Speculative investors are essentially betting on the future value of an asset, often based on market trends or economic forecasts, rather than its current intrinsic value. The allure of speculative investments lies in their potential for high returns. Think of the meteoric rise of cryptocurrencies like Bitcoin or Ethereum, the boom and bust of penny stocks, or the fairy tale success stories of startups turned tech giants. These are all examples of speculative investments that have paid off handsomely for those who took the plunge at the right moment. But with great potential returns comes great risk. The same volatile nature of these investments that can lead to outsized gains can also lead to substantial losses. As the old saying goes, the higher the risk, the higher the potential return. But remember, the converse is also true. The higher the potential return, the higher the risk of loss. Speculative investments aren't for the faint-hearted. They require a keen understanding of market dynamics, a high tolerance for risk, and an ability to stomach potential losses. But for those who can master these skills, speculative investments can offer a thrilling ride to financial success. But how does one navigate the choppy waters of speculative investments without sinking their ship? That's what we'll explore next. Navigating the world of speculative investments requires a map and a compass, a well-defined strategy. First and foremost, you need to identify potential opportunities. This is the very essence of speculative investing. You're on the lookout for investments that have the potential for significant appreciation. This could be anything from a promising startup, an overlooked stock, or a commodity expected to surge in value. The key here is to keep your eyes and ears open. Stay updated with the latest industry trends, financial news, and market developments. Next comes the important step of conducting thorough research. This is where you put on your detective hat and dive deep. The goal is to understand all there is to know about your investment opportunity. What is the company's business model? Who are the key players? What's their financial health? How do they stack up against their competitors? Remember, knowledge is power. The more informed you are, the better your decisions will be. Understanding market trends is another crucial step. Speculative investing isn't just about the individual investment, it's about the bigger picture. You need to understand the macroeconomic factors that can influence your investment. Are there any industry trends that could affect the company's growth? Are there any upcoming economic events that could impact the market? These are the kind of questions you need to be asking. Assessing risks is the final step in this process. Speculative investments are inherently risky, and it's important to be aware of this. Analyze the potential downsides of the investment. What could go wrong? How much could you potentially lose? This is also the time to consider your risk tolerance. Are you comfortable with the level of risk associated with the investment? Now that we've discussed the steps, let's touch on some practical tips. First, diversify your portfolio. Don't put all your eggs in one basket. This can help mitigate risk. Second, set a budget for your speculative investments. This should be money you can afford to lose without impacting your financial stability. Third, keep emotions in check. Speculative investing can be exciting, but decisions should be based on facts and analysis, not emotions. Finally, seek advice from financial advisors or investment professionals. They can provide valuable insights and help you navigate the complex world of speculative investing. Remember, though, that even with a solid strategy, speculative investments can be unpredictable. So what can you do to protect your capital? That's what we'll explore in the next segment. Stay tuned. In the world of speculative investment, risk is a constant companion, but with the right approach, you can keep it on a short leash. Now let's dive into the nitty-gritty of risk management in speculative investment. This is an essential part of the game, folks. Without a sound risk management strategy, even the most promising investment can lead to significant losses. Let's start with diversification. The adage, "Don't put all your eggs in one basket," holds true in the world of investing. Diversification involves spreading your investments across various assets, sectors, or geographical regions. This strategy can help to reduce the impact of a single investment going south. Remember, not all investments will perform well at the same time, so diversification can help balance out the highs and lows. Next, consider setting a stop-loss order. This is a predetermined selling point that kicks in if your investment falls below a certain value. It's a safety net, if you will. Setting a stop-loss order can help you limit potential losses and maintain control over your investment even during volatile market conditions. And here's a golden rule: only invest money you can afford to lose. Yes, speculative investments can yield high returns, but they can also lead to substantial losses. It's crucial to evaluate your financial situation and invest responsibly. The stakes in speculative investing are high, so make sure you're playing with money that, if lost, won't impact your overall financial health or lifestyle. Finally, keep in mind that risk management isn't about eliminating risk. It's about understanding it, measuring it, and making informed decisions to control it. It's about being proactive, not reactive. And it's about consistently reviewing and adjusting your strategy as market conditions change. In the end, the goal is not to avoid risk, but to manage it effectively. And that brings us to the final part of our discussion, the key takeaways from this video. Investing speculatively can be a roller coaster ride, packed with thrilling highs and stomach-churning lows. But with the right approach, you can tilt the odds in your favor. Speculative investing, as we've explored, is not just gambling. It's a strategy. A calculated approach to the world of finance that seeks high returns, packed with the potential for substantial gains. It's not about shooting in the dark, but rather about making informed choices based on market trends, company performance, and economic indicators. We've walked through the steps to successful speculative investing. It starts with research. A solid understanding of the market and the ability to interpret financial data are fundamental. Then comes the decision-making process, where you choose your investment based on your research. But it's not all about picking winners. It's also about knowing when to cut your losses. That's where risk management comes in. It's about setting boundaries for potential losses and sticking to them. It's about diversification, spreading your investments across different sectors or asset classes to mitigate risk. It's about being disciplined and consistent in your approach and not letting emotions get the best of you. We cannot stress enough the importance of risk management in speculative investing. Without a proper risk management strategy, you're essentially gambling and the odds are not in your favor. Speculative investing also requires a certain mindset. It's not for the faint-hearted. It requires a willingness to take risks, to venture into uncharted territories, and to face potential losses. It's about being comfortable with uncertainty and being prepared for volatility. But remember, with high risk comes high reward. If you're willing to take on a bit of risk and you do your homework, speculative investing can offer exciting opportunities. It can be a way to grow your wealth, to break away from traditional investment strategies, and to explore new frontiers in the world of finance. Remember, speculative investing isn't for everyone. But if you're willing to take on a bit of risk and do your homework, it can offer exciting opportunities. Until next time, happy investing.